Hello, everybody. Steven Sitkowski here. Welcome to this week's edition of Market Insights. It is September the 18th. Hope everybody's doing well. Quick disclosure, this presentation is for educational purposes only and not intended as investment advice. These are just some of my observations. So when you start thinking about the market and your strategy, 4 things I want you focused on. Fundamental influences, we'll be talking about those. Overall market condition, ditto. Which sectors are performing or not performing. And then finally, picking individual stocks within those sectors. So what's moving the markets? Well, all eyes are on the Fed this week. And in fact, I don't think the market did much of anything today. Yeah, I mean, it was as flat as it could be. There was nothing that moved. Well, hang on. Yeah, nothing moved even 0.1%, none of the indexes. And that's because they're just sitting back waiting to see what the Fed is going to do on the 20th. United Auto Workers, they've gone on strike. I know there are talks happening. This could impact Ford and GM. We'll sort of see if there's some resolution. Might this make a big difference in the price of their stock? Depends on how long the strike goes on. Late September is generally scary for investors. Last 2 weeks, market typically falls. So you're going to want to be a little more conservative. The 10-year Treasury has been creeping up. It's at 4.337. Remember that 10-year correlates to mortgage rates as well. So I'm not suggesting mortgage rates 4.33. They're about 7.5. But as the 10-year goes up, mortgage rates go up. And oil's hanging in there in the low 90s, certainly elevated from where it was a few months ago. What do you want to be watching this week? Home builder confidence numbers came out today. We have housing starts and building permits on Tuesday. The big day is Wednesday. That's when Mr. Powell will step up to the mic and tell us what he's doing with interest rates. On Thursday, like we have every Thursday, the initial jobless claims will come out. Philadelphia Fed manufacturing survey is pretty important. And then we will have the flash PMI numbers coming out for both services and manufacturing. See if the economy is expanding or contracting in those areas. So keep an eye on the news. This was last week's heat map. Not very exciting. Lilly lost 4.7%, NVIDIA down 3%, Oracle almost 10%, Adobe 6%, Palo Alto Networks 4%, Fortinet 6.5%, Microsoft and Apple are both down. The banks did well, oil did well, utilities did well. So it was definitely a flight to defensive stocks. And here's the year-to-date heat map. Been a great year if you were in the right stocks. Meta up 150%, Google 57%, Tesla over 100%, NVIDIA nearly 200%. The giants, Microsoft and Apple, nearly 40%. If you've even come close to doing it right this year, you're up 30 to 40%. If you're using options, it could be a multiple of that. Weekly leaders of note, Tesla last week had a great week. They're up 10%, PNC, CVS, Qualcomm, Moderna. AT&T had a really good week, up 5%. Small caps have definitely been underperforming. We've been waiting for them to kind of hit stride. So far, it hasn't happened. Economic surprise index starting to fall a little bit. See the end right here? So that's actually good news when it comes to the Fed and their decision making. And GDP estimates went from 5.8 to 4.8 Big difference. That's for third quarter. Still a great economy. CPI is on the rise, unfortunately, the last 2 months. So it's gone from 3 to 3.2 to 3.6. But the good news is core is still coming down. That's a big plus. We have 3 economic wildcards right now. We have the resumption of student loan payments, and will that hurt the economy? Less money to buy other things. Potential of a government shutdown. Sometimes I think we'd all be better off if that happened. And then we got the strike, severity and how long it will last. Those are the 3 things we're watching. Cost of shelters finally starting to slow. Shelter is the biggest component, by the way, of CPI. It's 32.9%. Fed probabilities for this month, 98% probability that the Fed stays where they are. And then you can see November 1st, 72% probability right now that they hold pat. And then on my birthday, a 60% probability. My guess is either November or December, we see a rate increase. And this is what economists are expecting. A Fed policy rate between 5.5% and 6%. We're at 5 to 5.25%. They're expecting another rate increase. So am I. Year-to-date returns, as we look at it sector by sector, communications, technology, discretionary, crushing it. Industrials, energy, materials been coming on. Financials, real estate, staples, healthcare, and utilities have been net losers this year. All right, let's take a look at the charts. See what they have to say. So this is the S&P 500. We've been sort of at an inflection point right here. First of all, you can see that we are forming a wedge, which is a breakout pattern. So we would expect to see the market move one way or the other. We won't know until it makes its move. But I'd be keeping an eye on this, and it's just kind of hanging around its 50-day moving average right now, which is pretty flat. So, maybe September the 20th, and the Fed will be a catalyst, but we don't really have one at the moment. How about the Qs? This is the NASDAQ 100, looks exactly the same as the S&P. And then for small cap, which has been lagging this year, look at how far we are below the 50-day moving average. And that's really a proxy for the economy. So, all right. We will check in with you again next week, give you another update. So until then, be blessed. Thanks for watching, and I'll see you soon. Bye for now.